Now, we will be talking about the problem loans that the banks has to deal. To begin with, lending is an integrated function of any banking system, and the resources that we augment have to be developed, have to be deployed in credit, because the risk-adjusted returns in credit are relatively much more than the investments, and hence, and also lending has a direct link with the development of the economy, and hence, credit is a key function, and hence, managing credit risk also becomes a very large function in a banking system. Over a period of time, the credit risk management system has evolved after the technology has come into operations, and it has become much more sophisticated, and a lot of tools have been developed, and credit sanction process has been now much more refined, system driven, and result oriented. So in this context, credit risk management has got many tools now, and major role of bank is to disseminate credit, taking care of the process of sanctioning the loan. Now, monitoring the credit post-sanction is an important function in navigating the credit risk management journey, because banks are perpetual entities, and the corporate sector to whom the loans are extended, they are also in a way perpetual, and hence the journey post the disbursement is a long journey, association of the banks with the borrower, and hence we need to navigate this risk management journey with a lot of caution, lot of care, to ensure that we don't end up with problem credit. But sometimes there are two kinds of factors which come into play. One is the internal factor, and second is the external factors. Sometimes external factors are overwhelming, and at that point of time, the banks need to play the role of hand-holding the entrepreneurs so that we don't land up in a problem credit. But many times, the problem credit arises on account of internal factors which are peculiar to the organization, because many of the entrepreneurs, they tend to become aggressive, and they may not be able to align their risk management philosophy with the external factors, and hence sometimes it so happens that they take more risk, and that risk passes on to the bank. So it is a matter of attitude of the borrower which needs to be monitored by the bank, going beyond the numbers, the data, and other factors. So we will, in this background of how the credit risk management journey goes, first is the credit evaluation system. Any loan that is already given, we can take it that credit evaluation system has been undergone, means it has been done well, and post disbursement monitoring becomes important after sanction of the loan. Now, when monitoring becomes weak, sometimes on account of the bank's lapses or not understanding the functions of the organization, then we contribute to the problem accounts, manifestation of problem accounts. We should avoid that. Now, for just to illustrate the role of banks in the post-sanction monitoring system, there is one side regulators, the other side banks' own loan policies, recovery policies, compromise policies, and there are a host of policies which regulate the conduct of the post-sanction follow-up of the advances. So we will be taking the case of two cases. One is, I think all of you know very well, that is the your Jet Airways. And second, we will take the steel case, that is steel industry case, that is the Bhushan Steel. So I would request all of you to be with me when we discuss about the case study, because very, very important for any bank executive is to go beyond the data. Many times data is able to tell us the story, but what is to come ahead, or what is the interpretation of that data and how it is going to influence your future decisions, that becomes very important. So what is important for all of us is to look at data, one point, monitor, and try to be with the borrower in this journey and get going. But more important will be to go beyond the numbers. Like in the case of Jet Airways. Jet Airways was the first very upcoming airline which was set up in 1993. It was an ambitious project of Mr. Naresh Goyal, and he went through and gave the slogan, "Joy of Flying." Because in India, if you see, Indian Airlines and Air India both have been amalgamated, and they have now become Air India now. Otherwise, we used to have two government-owned airways, and Jet Airways, post your liberalization, it has come into operations. So Mr. Naresh Goyal started this with a very small note of four Boeings, and then he went very aggressive in the next 3 years. So if you watch as a banker, it will be quite interesting that you will be overwhelmed with the joy of growth in the initial stages. But there we need to see how the risk is managed by the entrepreneur, because entrepreneur's risk management is equally important for us. Like, for example, if you see in the case of your Jet Airways, in 3 years, it has captured a market share of 20%. 20% of market share and flying 2.4 million passengers. So it's a very great success story it will look like. So, but banks have to read between the lines, and hence we need to have a hangover the macroeconomic aspects, how different industries are growing, and what is the potentiality of growth in future. As far as the airline industry is concerned, as far as penetration is concerned, as far as the potentiality of new flyers are concerned, we have immense potentiality in India and also in Asian region. But what is more important is how careful they are in their growth trajectory. That becomes very important. So if you see, in 2004, Jet Airways went for international operations. 2004, 93 to 2004, and then went for an initial public offer, that is seeking capital from the public. So that's a good going. And then it went on, and in 2012, there was another big event for Jet Airways. It acquired Air Sahara and floated two low-cost carriers, that is Jetlight and Jet Connect, in 2012. So it went on the expansion spree. Banks have been with them throughout the journey, and they have been pumping additional funds led by the consortium of lenders. All high-profile banks have pitched in, applying their mind, and they have seen the growth potentiality of the airline. And then Jet Airways ventured into, why I'm explaining these events, there is a huge shift in the gear of the entrepreneur in risk, like going from the fourth gear to fifth gear. That means high speed. High speed has a tendency of having high risk. If the entrepreneur collapses, it devolves on the bank in the form of a problem credit. That is what has happened here. Now, in March 2012, they took over the Air Sahara, floated two low-cost carriers, that is Jet Light and Jet Connect. Now, just observe the growth pattern. At that time, they felt pressure of funds. Means there was a lot of internal pressure on the financial system of Jet Airways. Banks were also just looking at the high speed growth and were little apprehensive about what is going on with the organization. And hence, Jet Airways ventured into a partnership with Etihad Airways, that is of UAE, ceding 24% of equity in November 2013. That is immediately after taking over Air Sahara. But Mr. Naresh Goyal, he was smart enough to hold 51% of share with him as the major stakeholder. This is how the storyline of Jet Airways went. Banks kept on lending from time to time. Of course, as a banker, you must always look after the growth and prospects of your borrower, because we grow with the bank, we grow with the entrepreneur, that is the borrower. So we must always take care of that. There is no apprehensions in that. But we should be watchful about their strategic steps, which may manifest risk and which will devolve on the bank. Now, just see Jet Airways, the loans have reached 112 billion, of which 72.51 billion was given by the domestic banks. Consortium members, they keep joining with the success of the borrower. That is the first, it will be a few banks, say 5 or 6 banks. Then the number increases as the success of the entrepreneur is visible in the media. So what happened after that? 11 banks, ultimately, when it has become a problem bank, credit, then by then there were 17 banks in the consortium. So this goes like that. So we should be very cautious about that. Now, there are overseas borrowings of Jet Airways, and they have also issued non-convertible debentures, because non-convertible debentures are issued by those who have a high rating. Others cannot get such kind of money. So while the going was good, banks kept lending additional facilities in the form of funded facilities, non-funded facilities, LCs, bank guarantees, to enable him to get going. So that was a good part of the, to do that. But the burden of debt added naturally, then there were early signs of stress in the account. Early signs of stress. What were the it has started. whatever to the bank as far as the stress is concerned, they will come it's in the margin because they are not able to cope with the inflows. So these kind of manifesting in Jet Airways, and
Professor Rao, your voice cannot be heard now.
yeah, now
Yeah, it is very good now. Thank
yeah.
you.
Now, early signs of stress were visible with the action of the Jet Airways in merging the low-cost carrier with the mainstream Jet Airways. So this merger is a sign that they are not able to cope up with the three lines of business. That is Jet Connect, the Jet Connect, and Jet Light, and and your Jet Airways. So they merged to the borrower, to the, if not to the bank, to the borrower, it was very clear. So it merged all the entities, and Jet Airways was started incurring losses. The first loss was booked in 2017 when they posted a quarterly loss of rupees 10.45 billion in the first quarter, in the quarter January to March. So it went on incurring losses because of the ambitious growth, diversification of into low cost career, then full service career, and airline started defaulting on statutory dues. Now, this is a very high red flagging that banks need to pick up. People started failing to pay salaries, defaulted on making payment to vendors. So these are the kind of signs which are quite visible. If this is external factors. Now, if you see the internal factors, a very ambitious growth. We should have growth ambition. There is no doubt about that. But we should always keep pace with the industry level growth so that we don't land up in too much of risk. And acquiring, rebranding, repositioning, all these are some of the strategies which the entrepreneur will have to expand the business. So Jet Airways began dropping the fares to compete with very prominent airlines, low-cost airlines like Indigo, SpiceJet. All these carriers also came into picture, and Jet Airways has to keep pace as far as the fare another problem with the entrepreneur, decision-making system, management system. There is no point in having 100 top management members and only the head of the organization only prevails. So there is no point in having so many your top management teams. So decision making is anti organization, means it puts the organization to this kind of problem. So poor management down the hierarchy. The moment people come to know that we have no say in the organization, people start withdrawing. So these are all some of the tendencies which the banks will have to very keenly observe. So observing the attitude of the borrower beyond numbers becomes very important. Now, these are the internal ones regarding the management. Now you see the external factors. Crude oil prices have gone up. Now, if you are running an airline, you should be able to maneuver your operations to fall in line with the changes that may happen due to several external factors. Policies to connect small. So there was some mandate that you need to fly these many smaller stations which are not viable, but you need to do that for more inclusive air business. So competing budget carriers started flooding the market and they started offering no-frill services and yet on time. Like I think Indigo has that reputation that it is a no-frill airline, like your South African Airlines in US. So flyers did not appreciate the fare difference between full service airlines and low-cost airlines. So these are all some of the things which make external factors much more complicated. So Jet Airways lost a lot of money and they started losing money and the piling up of debt. So debt service obligations have increased. Now banks as partners in whatever is happening have pitch and help the organization. The entrepreneur, that is Naresh Goyal, is able to skin in the game increase so that they do that. But the banks could not do that, though Mr. Naresh resigned from the tip. But by then, I think all of you must have read in the newspapers that there was a lot of diversification of funds of the company to others. So the most aspect of any problem credit is diversification. And starting new ventures without management, entrepreneurs should also have a risk management. So this is the storyline of Jet Airways as to how it has started on a good footing, made some mistakes in between as far as in the management, diversification, takeover, and product diversification, and market share, all these places, somewhere success, somewhere failures, but it was not balanced. What has happened is operational creditors have increased. When your reputation is good, people supply so many items, and if the going is not good, they will queue up before you. So there were several operational creditors and vendors' dues that piled up to 100 billion. The employees' dues, the interdependent entities went into problems. So all complications started when Mr. Naresh Goyal withdrew as a director. And depleting assets of the company. Most of the airlines, they have the aircrafts, leased aircrafts, they don't own the aircrafts. So the negative net worth of about 130 billion. So depleting assets of the company is a cause of concern for the lenders. So this is all about how your Jet Airways storyline went. The entire loan facilities have become NPA on April 17, 2019. Unfortunately, SBI-led consortium have invoked Insolvency and Bankruptcy Code. NCLT on June 30 admitted the insolvency petition. So it is going on now. It will take time. Given the negative net worth, low asset value, the haircut, that is what we normally call in the banking lexicon, that haircut means how much less you will get against the outstanding loans that we have in the system, in our books. So we cannot estimate at this stage what is going to happen and what will be the haircut. Current status of Jet Airways. Now what is happening? Jet Airways shut down its operations on 17th April, and shutting down the company affected about 20,000 employees. There were a lot of rallies, and there were a lot of complications following that. And there are liabilities to the tune of 370 billion, and the assets are depleting. The account is under resolution with NCLT, and India has brought, it will be contextual to mention here that Insolvency and Bankruptcy Code has been enacted in 2016 in India, and earlier we used to use other tools for recovery purpose, but now it is a good step that we have this particular code, so that we can invoke the and may go for a quick debt resolution process. So what is the takeaway from Jet Airways? Banks did not monitor the loan account the way a regulatory monitoring system is designed. We will discuss after the next case how the monitoring system has evolved. Monitoring system is also dynamic. It goes with the industry developments, and it has to be aligned. So the banks, I would say, kept lending to Jet Airways, and authority to leadership, ambitious acquisitions, hasty diversification, and hasty merging of the entities within the organization. It got a good head start, but in the aviation sector, but lost it. So an early rapport of the bank with the management could have perhaps averted this kind of a disaster. Maybe that somewhere the banks could have counseled them about the risk that they are taking, so that they could have perhaps lowered down their ambition to fall in line with the markets, and the Jet Airways would have been flying by now. So these are all some of the aspects. The point I want to highlight here for our youngsters, next leaders of the banking industry, that we need to go beyond data. That is what I was telling, and be with the borrower in all, and you need to be a little bit of a psychologist also to counsel them, to guide them, to ensure that they listen to us. Because many times the arrogant borrowers, they don't listen to us. But then there are ways of doing that. So we need to do that. Now we will look at the next bigger account, that is the steel industry account. Steel industry was a very good, good going industry at that time, and this gives us another insight of how the responsibility of the banks in managing the risk could be different. Now, Bhushan Steel Limited has similarly lot of units, and the main unit is in Odisha now, and they have a plant capacity of 110 megawatt as far as power is concerned. But as far as iron is concerned, they have some capacity utilization levels, which was 65 in the beginning, and they also have a very ambitious growth trajectory, and they have started setting up expansion plans. And banks were getting into project finance at that time in 2000, early 2000. Banks were also ambitious in associating with new projects, and hence they started lending. Lending very, I won't say aggressive, but the nuances of the industry was at that time very enterprising at that time. So hence banks have started lending to various kinds of industry, and this Bhushan Steel was one of the promising industry at that time, and banks have started pitching in. But what happened from between 2000 and 2012, the steel industry was not doing so well. In 2012, the markets have dropped, and you will be surprised that the steel price in overseas markets have come down from $300 per ton, from $1,265 per ton to $300. So 2008, it was 1265, and by 2012, it has come down to 300. So you can very well estimate a production capacity which was oriented for a 1200 per ton pricing, how it will perform when it comes down to 300. So this is one of the biggest external factor which the banks should have taken cognizance of, and should have anticipated some fall in the prices. Some price corrections do happen, and that is why the historical data is very important. The banks have started lending to this industry, and Bhushan's lender pinned their hopes on Odisha plant. In Odisha, they have set up a new unit which has come up well, and its full capacity would have, but it has never reached the full capacity. So there are some external factors, there are some internal factors, but even then, BSL was on the borrowing, and SBI and consortium of lenders sanctioned fresh facilities, because hand-holding sometimes becomes incumbent on the part of a bank in managing the risk. Because if you pump in little money, maybe that it will come back again to the life. So in 2012, when BSL was on the brink of default, SBI and the consortium lenders sanctioned fresh loans. But as steel prices remained very low and Bhushan's interest costs escalated, the company's total debt rose 30% in 2 years. So it has gone to about 460 billion by March 2016. There was no way in which Bhushan Steel can service the loans or can come out of the perpetual debt burden. So what has happened here? There is an industry which was very promising. Banks have pitched in, they have given loans. When the prices started crashing, the production output could not be maneuvered to suit the fall in, along with the fall in prices, your production cost will not fall so quickly. So you will have to do a lot of costing exercises for that purpose. So there was a failure on the part of Bhushan Steel, and they could not service the loans and could not come out of the perpetual debt burden. So banks, what banks missed to read the disaster in the making? That is very interesting. When the steel prices were going down as against the production cost, and exports were coming down with dip in global demands for steel due to collateral impact of global financial crisis in 2008 that rapidly spread to other areas, the only option for banks was to monitor and stop lending and asking the company to go slow. But instead of doing that, what has happened is banks kept feeding the ailing industry with a hope that for a revival. So the interest accumulated on debts overwhelmed the income stream, and hence default is inevitable. Either the company could have slowed down, or banks could have abstained from taking further credit exposure when the viability of the company was dwindling. So the banks have got not many options when the situation becomes complex. So having already extended large sum of loans to the entity, giving an additional dose with a hope that it will revive is quite uh, sometimes become necessary. But if it doesn't work, then we get into more higher NPAs. So in the meantime, providing additional hand-holding loans become essential to keep the unit running. So what has happened is, out of when they failed, there was no other option for the bankers but to go for legal action, which becomes inevitable because you can't hold on your action for a longer time. So either the company could have slowed down or banks could have abstained from lending, which did not happen. And what happens in that situation is the exposure increases and desperation to take legal action also increases. So taking a call to recall the facility at that juncture becomes a very complex, very contentious issue. Because if you pull the plug, the unit will collapse. If you pump more money, it will be much more risky for you because it has not worked earlier. So you need to be, you will be in a complex situation when you need to tone up your decision-making tools. But without any option, the banks have had to go for recalling the loan. Now let us look at the reasons for fall of Bhushan Steel. Internal factors. As usual, in any entrepreneur, the growth ambitions, if they are not moderated, if they are not aligned to the industry, if the likely external factors are not taken into account, it becomes the ambition of growth becomes a stumbling block for the entrepreneur. Diversification abroad. They have started setting up joint ventures in Australia and other places, and they went on borrowing spree. Because the going was good, the banks have pitched in, and more consortium members and more consortium share, and the loaning went on increasing. Management was not very prudent to go slow in times of stress. And even if you look at maybe that you will have to do a microscopic study to see how the operating expenditure behaved in those years. It will reveal whether the operational costs they were able to contain, or it was also increasing, adding to the troubles of the organization. The external factors not within the control of the entrepreneur. It has also kept the organization in a very challenging position. Demand for steel in overseas market has gone down. Prices of steel went down, and overseas market impacting the revenue streams of the organization. Banks, not finding any other option, had to recall the loan. And ultimately, on 26th July 2017, banks invoked the Insolvency and Bankruptcy Code 2016 and went to National Company Law Tribunal. It is a quasi-judicial entity which hears the recovery petitions of the bank in India. So it is like a semi-court that triggered the corporate insolvency resolution process. The process starts. And with the usual process of appointing insolvency resolution professional to resolve the debt. So that is a process which the account has to go through. In this particular case, as far as Bhushan Steel is concerned, that has happened. Tata Steel, its claim that it would take over. It was good in that way that ready buyer for the company. Many times banks have to struggle to find a buyer for any stressed assets. Stressed assets selling becomes very difficult because the selling doesn't take place, the quotations are quite low, and the banks have to face a lot of haircut. That is what we call haircut, means getting less money than what is outstanding in our books. So what has happened is banks have gone against Bhushan Steel, and Tata Steel submitted its resolution plan. So during your corporate insolvency resolution process period, when the insolvency professional runs the company. So this is the management goes out of the system, and the insolvency professional and the committee of creditors, they oversee the functioning of the company in the intermediary stage between between auctioning the asset and after the insolvency resolution petition is accepted by the NCLT. So what has happened? CIRP, that is your insolvency resolution process started, and there were a lot of outstandings were reduced for the bank had to banks have got against 56,000 crores, that is about 560 billion of loan, they got 352 billion. 352 billion they got. That means they had to face a haircut of 37%. 37% is the P&L debit, profit and loss account debit for the banks against the Bhushan Steel Limited. And about 1,200 crores were given to the operational creditors. Operational creditors means vendors whose dues are outstanding against the entrepreneur. So, but there are two good points, but the ending is good in the sense the company is saved, the company is still there, and the livelihood of many of the employees are protected. And even if it is a write-off, banks will have to partially take the hit, because you know the provisioning requirement for a substandard loan. Even against the standard asset, we make a provision of about 1%. In India, we make 1 to 2% of, depending upon the type of loan, provision against standard asset, substandard, and 20%, 30%, and 50%. RBI guideline for that. So we make provision. So if we make provision, if the haircut exceeds the provision, then it hits the profit and loss of the bank. Otherwise, we get back some of the provisions back into the books. So exactly what percentage of provision coverage ratio for this account, we need to check. But the haircut was 37%. So what has happened? Jet Airways it is still hanging. We do not know what will be the haircut for the banks. But in the case of Bhushan Steel, it is the haircut is 37%. That means we got back some money after the collapse of the unit or merger of the unit with Tata Steel. Now, let us see how the what are the takeaways from the two cases that we have discussed. One, the Jet Airways, and the second, your Bhushan Steel. Two divergent cases have been discussed, two different industries. The nature of business is different. To bring to this forum the peculiarities of monitoring system. How you need to monitor an airline account, how to monitor a steel industry account, how to monitor, you need to read a lot of literature on how to monitor different sectoral advances about which the banks may not be knowing the operating procedures, but they need to monitor it. So Jet Airways is still under the corporate insolvency and resolution stage, and Bhushan Steel got merged. Bank's haircut is there. So let us recap. Based on the rise in loans turning into TS, and understanding the main reasons will help us in evolving standard operating procedures of monitoring credit. There are guidelines from the regulators. There are guidelines of Basel, that is bank. It brings out Basel 1, Basel 2, Basel 3, capital adequacy and all this. And they also bring out operational manuals. But what is more important for a bank and a branch is to drill down the detailed standard operating procedure for monitoring the credit. The closer you monitor, the less the probability of default. If you cannot monitor, then you lose a lot of money. When the unit is on the growth curve, profits are repaid in time and your relationship is good. Is oriented to buy into new assets, which may the risk of which in their knowledge or it may not be in the knowledge. So often in time means unconnected areas, and they face the risk and it ultimately passes on to banks. So we need to curb that tendency of the entrepreneur to diversify. Sometimes diversification of funds also takes place into individual accounts. So what is more important for a bank? For a bank is to see where the funds are going, how the funds are flowing. You need to check the beneficiaries' details. You need to see how the checks are issued by the finance department of the unit. All these things are micromanagement of the operations. So arrogance of success also leads to unmindful expansion and diversification, and inability of the borrower to comprehend the risks. And major reasons for rise in problem accounts in the bank, in the banking system, is sometimes the lack of vision of the entrepreneur. If the entrepreneur is not having the vision, the bank should have the vision to counsel him, to bring him to the direction which is sustainable, and they need to see how the competition is rising and how the external sectors could manifest. Some borrowers, sensing the impending failure, they diversify funds into their own accounts, create personal assets, and cause more damage to the organization, to the entity. So that that is what has happened in the case of Jet Airways. Many times the external calamity, the pandemic which is now going on, can be a very big shock for the entity, and banks will need to have a hand-holding policy for that. So there could be many times external calamities. We need to manage them. Internal family disputes in the management and conflict of interest or among the management teams, maybe owners, maybe management teams, that we need to take care. So investment in markets to make quick money, sometimes entrepreneurs also try to diversify into say mutual funds or equity or bonds market, or into investment, because if they have the fund flows, that also becomes risky, because the moment the pressure falls working capital, this disruption. New regulation pronouncements also impact the manifestation of problem. Labor disputes, strikes, industrial relations can lead to lockout, strikes, and disruptions. Banks should be watchful about them. Means how the conduct of the organization, how is the industrial relation of the unit with their employees. So these are all some of the aspects which need to be monitored. There are no written rules for certain kind of monitoring, which the executive itself evolve based on the broad policy of the bank and the regulatory dispensation of the regulators. That is why the standard operating procedures of monitoring the credit at the unit level becomes much more important, and how you maintain the rapport with the borrower so that he doesn't go berserk. If he goes berserk, it becomes a problem for us. If banks do not intervene in time, then the loss of entrepreneur is bound to flow back into the bank, eroding the quality of assets. Now, as far as India is concerned, I think India or globally, the problem accounts of late have started increasing. Like in India, the composition of NPAs are around 10% now. 10% is a very high percent. How? Any banking system, how you price what is the pricing mechanism that we adopt for credit? We always risk on the interest rate charged from the borrower. That means we perceive some kind of a risk. We have different metrics in our bank. In every bank, there is a pricing policy. In pricing policy, there is a risk premium which is loaded to the cost. Cost of resources, operating cost, plus risk premium. If you load 2 to 3% risk premium, if your NPAs are 1 to 2%, you can manage. You cannot load 10% on the minimum interest rate as a risk premium, because there is a lot of competition in the market. You can't say that I will always have 10% NPS, 10% net NPS, and hence I will load 12% premium and I will charge 30% interest. That is not tenable. So the banking system will have to, can manage a reasonable mix of problem accounts. It is not that problem accounts will be zero, because the problem accounts manifest, we have already seen in the case study also, it manifests from two sources: internal failure, external factors. Even if internal factors are taken care, sometimes external factors are overwhelming. And in that case, the NPA, the problem accounts may manifest. So you should you should have skill sets to appraise the loan, sanction the loan, disburse the loan, monitor the loan, and at the end, you should have equal proficiency in managing problem accounts. You cannot have a banking system with zero problem accounts. It will always have some kind of mix of problem accounts, but it should not be disproportionate. So proportionality is very important. If you manage the risk in that way, then maybe. So RBI has been upgrading the monitoring mechanism. First, it has come out with red flagging of loan accounts. That means they have given some 45 indicators. If you go to the, you can find it. I will give the example. If there is a frequent checks in the loan accounts or current account or working capital facility, cash credit account, there are bouncing of checks. What does it indicate? The responsibility on the bank, on the part of the entrepreneur to issue checks without enough balance, or he is in financial stress, or he doesn't bother about his reputation. Frequent request for ad hoc. They will of requests, delayed submission of stock state. They need to give to the bank what is the stocks that are lying in the site of the unit. So if they delay, that means on the basis of that, the bank is able to make out whether the cash credit working capital utilization and the amount of stocks in the warehouse, they are both matching or not. And many other operational inconsistencies you can always capture. So what is more important for us is to look at incipient sickness. If this kind of, that means some kind of problem. India, we have the RBI has come out with a new tool that is called asset quality review. Now, what is asset quality review? The central bank conducts annual inspection of the bank. Every country has got an annual inspection of the banks as a regulatory. Their data on NPA and a bank's data on NPA, there is a wide divergence. That means there is something interpretational problems as far as prudential norms are concerned. That means the prudential norms are very straight. Then there should be no difference of NPA of the bank and the NPA data between banks and those found during annual inspection of the banks. Vexed with this problem of difference between the two, RBI has introduced a monitoring tool that is asset quality review. That was in 2015 September. And they have simultaneously stopped a restructuring facility which was allowed earlier. A loan, if it is restructured, you can maintain the standard asset classification for 1 year and you can have 5% provision against such restructured assets. That was the facility available. Now, instead of restructuring, if the account becomes NPA straight, 15% you have to make provision and NPA increases. So, in dealing with the problem accounts, there are 4 ways in which problem accounts can be broadly managed. First is restructuring. That terms and conditions of sanction, additional amount will be sanctioned, interest rate will be reduced, or you can recast the terms of sanction. That is one way, that is restructuring. Now in India, if you restructure, even then, if the overdues are 90 days, then the account has to be classified as NPA. That is problem account. Earlier, there was a facility for the banks to classify it as a restructured asset and standard classification for 1 year and make a provision of 5%. Now you have to make a provision of 15% and classify it as an NPA. So that is the up norms of, and it has also introduced in 2014 April in order to ensure a closer monitoring. A loan account turns into NPA in 90 days. So there is a special mention account monitoring system under SMA 0. The overdues will be up to 30 days. So accounts which are having overdues of 0 to 30 days, you need to monitor. They should not slip. Now, if they slip to 30 to 60 days overdues, it is known as SMA1. If it is SMA2, that means 60 to 90 days. So within these 90 days, there are 3 ranges which needs a heightened monitoring of the accounts. In this context, I would like to share that it is not possible for all of us to monitor the accounts in this format for all the accounts. So you need to make an ABC analysis, that is size-wise frequency distribution of your portfolio, assign higher attention to higher loans, a little lower attention can be for lower loans, but a higher value loans must be brought under this format of SMA 0, SMA 1 and SMA 2. So that it doesn't become NPA, and before that you will be taking some action. So there is another monitoring tools where the bank has to send details of loans, central repository of information of law accounts to the central bank. So they will be monitoring the data from a level, because now the central banks are doing off-site monitoring and on-site monitoring. On-site monitoring means they will come to the bank. Off-site means they will look at the data. So that, and most of the central banks have implemented for the credit monitoring system the automated data flow. That is, the data from the bank flows to the central bank online, so that they are able to know what are the big transactions that are taking place. So there is a monitoring, heightened monitoring mechanism to ensure that banks do not are not exposed to high proportion of problem accounts. Banks keep all the accounts under strict watch and review the loan facility from time to time. Though it is every year, there is a monthly monitoring system introduced by many banks. That is, every month we look at the accounts. That is the practice as far as the line management is concerned. The only challenge for the bank is in the implementation of monitoring guidelines. Now, if there is a slackness in the monitoring system, then there is a high proportion of problem credit. There are adequate tools, not that we are not having tools for the accounts. Of implementation, we implement the monitoring guidelines, it depends on how we do it and how to prevent slippage of the accounts into problem accounts. Now, accommodative stance of banks. Not intentionally or with any motive, but banks try to try to accommodate the request of borrower for postponement of recovery action. Now, whether it depends on the circumstances in which, if the problem is temporary for the entity, and otherwise the entity is fundamentally strong, you can take a call on that and hope that some resolution will come up. You can take a call on that. Since large loans are already given, sometimes the banks tend to grant ad hoc facilities to save the unit from distress. That is hand-holding policy. Banks have three or four kinds of policies. One is the loan policy. That is to which loan, to which sector you will finance, how you will finance. That is the loan policy. Then you have exposure norms. Now the exposure norms for single borrower and your group borrowers, it is now linked to tier 1 capital. So you need to look at that. So exposure policy. Then sometimes we want to quit the relationship with a problem account. So we go for one-time settlement. That is called OTS policy. That is also one way. Instead of prolonging action and going into legal litigations, if the person is settling the account for say 90% of the balance, then I quit. So one way of coming out of problem account. So the third one is the OTS policy. And the fourth and the most painful is resolution of debt. That is going to NCLT, going to recovery tribunals. There are the Securitization Act in India where you can invoke Debt Securitization Act. All these are prolonged pain for the bank. We have to spend a lot of energy on that. But in some bigger accounts, it is inevitable to do that. So my request to our friends is, please take care of this span of post-disbursement till it becomes an NPA. Let it not become an NPA, 90 days. And watch the account, counsel the borrower. And in practice, the problem accounts will manifest, but early signs you should be able to pick up. If you do that, I think we will be much better than what we are today. So since exposure of banks, now before we conclude our talk on this, many of the banks are now tempted to get exposure to real estate. In India, commercial real estate is a high risk area. That is why we have to make a provision of 5% against standard commercial real estate accounts. Individual loans, that is retail loans, home loans. Retail home loans are safe in the sense that there is a mortgage against we have a collaterals for that purpose. So we should be watchful about that. And then real estate in India, we have a real estate regulatory authority, that is RERA Act, which has now been promulgated, that is to regulate that sector. But when getting exposed to the real estate, one should be a little more cautious with the other industries because it has more risk. Land acquisition is a risk, construction is a risk, and all related legal implications of real estate are very high. So a little more cautious as far as dealing with the real estate is concerned. And in many countries, real estate is now booming. It will come up as a major area of exposure. These developments should be able to, we should be able to. So the sum and substance of what we have talked about in the journey of credit risk management, the crucial part, one crucial part is origination of credit. Your origination of credit should be of very high quality. That is elimination of risk. Let not compromised accounts enter into our system. One which we need to rigorously apply. That is why credit evaluation system must be very rigid, because now a lot of tools which for that purpose, sophisticated tools of your credit risk information agencies are there, and there are a lot of other agencies which provide us data on that. So we need to do a lot of data crunching to ensure that we don't get bad accounts into our system. The second, once you have granted a loan, credit monitoring system for the first 90 days becomes the acid test for risk management professionals. If you manage within these 90 days and hold on the tempo of entrepreneurs and their tendency of taking risk, then you will be successful in reducing the number of problem accounts. I don't say that you will, and more so in larger accounts, because in big accounts, in corporate accounts like Jet Airways or Bhushan Steel, they have got a much more clout on the government, on other stakeholders. So it becomes very difficult and a delicate system to counsel them. But we should do our job, and we should be data analysts, we should be psychologists, we should be counselors. So we have to wear too many hats to manage the credit risk. That is the most important part is the monitoring. Now a new system has come, that is inter-creditor agreements. Now, if you are jointly lending in the consortium, how to deal with a problem account comes to picture when a default takes place. Now, RBI has come out with a need to have an inter-creditor agreement. That means all the creditors will sit together and decide the course of action in case a default happens. What will be the standstill clause? How the legal action will be taken? How the intermediary support will be extended? All these will be jotted down in details, and people will be, the banks will be binding on the inter-creditor agreement terms. So that is a pre-processing of an SOP in case an account becomes NPA. It is comparable to your emergency in the aircraft. You will find the when you sit near the emergency, they will be giving you the guidelines that in case something happens, you need to open the window like this. So same is the inter-creditor agreements. You need to jot down in case something happens, 1 in 100, what you should do. That means that is an inter-creditor agreement. It is a good development because it will list out what will be the action points in case an account becomes NPA at a later stage. Hoping that is very important. So it's very nice to carry through this process, and I would request all of you to read some of the literature. There is a book of fundamentals of corporate credit analysis, so that will give you some idea about the appraisal part, because appraisal, credit appraisal is the most important entry point. And then once the loan is granted, then the monitoring comes to our head. And in case it becomes a problem account, don't get perturbed. There is a debt resolution process which is well defined by the banks, and the policies have to be followed in letter and spirit. And a quick action in time, a stitch in time is 9. The same thing happens as far as problem accounts are concerned. Your action should be very, so that underlying assets do not lose the value. The moment the unutilized assets at the site of the unit, it gets eroded, then you are losing money on that. That is why now within 14, the NCLT accept recovery petition, insolvency resolution professional identify, and creditors are formed, so that quick action now so that you see the value of the underlying assets, which are either mortgaged to us or they are lying in the site of the borrower. So, Professor Venkatesh.
Thank you very much, Professor Rao.
Yeah, Professor Venkatesh, shall we take questions from the participants?
Certainly, certainly. So, as with the previous webinars, may I now invite all of you to post your questions on the Q&A section. Okay, Professor Rao, I think this is a question that many participants may want to ask. Suman wants to know,
yeah,
what were the signals in the two cases? You know, Jet Airways, Bhushan.
What are the symptoms?
What were the signals? You know, advanced signals.
Advanced
signal that the bank got.
Okay.
And what did the banks do? What did the banks do when they received these signals?
Yeah. See, point two kinds of signals. One is early signal, which are still at the nascent stage. Any organization which tries to grow at a rate higher than the industry rate, 1 or 2% is fine. That itself is a sign. And compliance and conditions
we are losing your
every
voice.
month statement of details are to come to you. Yeah, voice now.
Now it is better, but if it helps, then maybe you can close the video. Then the.
Acha, close the video.
Then your voice may come across better. Let us.
Yeah. How is it now? Now I have closed the video.
Now it is fine, but we can still see you on the video. It is fine, so we can continue. Okay.
Achha, 1 minute. Yeah, now I have closed.
Yeah, now it is very clear.
Is it audible now?
Yeah, audible now.
Clear. Okay. Now, the thing I was telling, there are two kinds of signals. One is early signals. What is early signal? A non-compliance to the terms and conditions of sanction of a loan is an early signal. You say that by 5th of every month, the affairs of the company should come to me, and it is not complied, is an early sign. If you should not issue a check to a company with whom you are not dealing, Like I am in the business of airways. I will be giving checks to for aviation fuel. I will be giving checks to suppliers of food. I will be giving checks to different. But if I give a check to a stockbroker, the bank should be able to capture that information. In practice, it is very essential for us to very minutely look at the operational aspects of the account. The account is running very well, but the tendency of the borrower is to issue a check to a real estate agent or to a stockbroker. What does it indicate? The going is good. These are the incipient sicknesses. So what we need to do? Occasionally we should, in practice, occasionally you cannot check all the account, all the things, but you just say that if a 1 million check is there, once in a week, I will pick up 5 checks and just see the beneficiaries to whom they are giving the checks. If I catch something, I will counsel where the money is going. Means the end use of the funds is checking the end use of the fund is the responsibility of the bank. Now, these are the early signs. Now, what are the later signs? That is the signs of actual sickness. You have assessed the working capital requirement of, say, 100 million rupees. 100 million is quite sufficient for him to do the business. But after 7-8 months, he comes with a request for an ad hoc of 1 million. If you are convinced there is an increased order book and you are okay with that, you can always approve. Otherwise, that means that disaster is in waiting. So, my dear friends, what is very important is just look at the account is the mirror. Just look at the account. Check the transactions. If you are convinced, fine. Not convinced, talk to the borrower. These are the early signs. Now he will think that the bank is so watchful about me. So maybe that he will abstain from doing such things. So there are glaring signs of sickness, nascent as well as actual sickness. We should be able to capture that. And there are tools for that. Rate monitoring system. You need to build an SOP for that, standard operating procedures. And nowadays data is flowing. So you don't need to pick up the check. You need to just see the digital information. And you can monitor the account. That is what is my take on this.
Now, another interesting question here, Professor Rao, is that the credit rating agencies were also involved, right? I mean, they also, right? Now, what did the credit rating agencies do in this case? And you know, a related point would be: is there efficient sharing of information across banks and also between banks and credit rating agencies?
See, credit rating information. There are 2 kinds. One is the credit history. That is the CIBIL provides. In India, there are some 4 or 5 credit information entities which provide the rating of the individuals and the entities. They provide only data. That they will say that, like CRISIL gives a rating to an entrepreneur up to 900 points. There is a policy of the bank that if the rating is 700, this is the riskiness. 750, this is the riskiness. So every month you can collect that information. That is one thing. Second, there are external rating agencies like ICRA, CARE, and Moody's, and all these rating agencies. They do the rating of bigger entities. Like I think people have read in the newspaper that Moody's had downgraded the India's rating from BA2 to 3 or something like that. So what does it indicate? That means the riskiness of investing in India has one notch up. Same thing happens if the loan account is above rupees. In India, it is 50 million. That is 5 crores.
But Professor Rao, just to interrupt, so in the case of these two companies, Jet Airways and Bhushan Steel, did the rating agencies downgrade them well in advance for people to take action?
See, this is what happens actually. The regulation of credit information companies is not so tight enough. Mostly the downgrade happens after the damage is done. What you say is the proactive downgrading. Because how downgrading, just you think, suppose you are the rating agency, just think of it. The data should flow to you. You cannot do things without the strength of information. Now the information flow to the bank, to the regulators, to the rating agencies, to individuals, everywhere the data source is the same. So when the data flows, then they start working on that. So there is, of course, it is very good if they can pick up the early signals from the market intelligence and they are able to change the rating much before the damage happens so that we can do the course correction early. That is the most ideal thing to happen. But if you see the practical angle from the practice point of view, the rating, the information flow, if a default happens, I give the information. Now the default has not happened, but the tendency of default has built. Now on what basis I will be able to do that? It is the problem with the rating agencies and the banks and regulators and all these guys who are in the value chain of credit risk management. All these people, the dependencies are almost identical. So the best information for that is the bank, because they are right in touch with the account. Who is in charge of the account? Bank is in charge of the account. What you can see in your ledger, in your account, the rating agency cannot see, the regulator cannot see, external rating agency cannot see, but you can see. If you don't act and expect somebody from outside the body to read these between the lines and give you the rating much before the collapse happens, I think that ecosystem has not yet been built to such sophisticated level. But maybe in future it will happen.
That is an interesting point. So a related question that we have here is, who in the bank? Rupak Thapa says that I'm the relationship manager.
Yeah.
This is a large corporate client. And so is the top management in the bank to be directly involved, or is the relationship manager's job to monitor these accounts in this level of detail and so on? So that is
yeah, that's a very interesting point. But from practice point of view, from implementation point of view, every individual in the bank has an onus to become the voice of the bank. I don't say that the action point lies with the relationship manager, but the trigger, the voice, and pursue the voice. If you don't pursue the voice, then you say that, no, I am not the credit manager. and the credit manager is not listening to me. But that is not the solution for that, because the dealing with the problem accounts is the joint effort of the entire team. Every individual is a bank in itself. If you feel the responsibility, you should become the voice of the organization and pursue your voice at the appropriate level in an appropriate manner. With the peers, with the seniors, you have to manage the hierarchy, because you can't say that I am in the system and I am not having the capacity to do that. I will keep quiet and the bank gets into loss. So that is not acceptable. So every individual is a bank and he is the voice of the bank. He should pursue his voice till the logical end.
Now,
so that is the my point
Suman,
from the practice point.
Suman has another question. So I am Suman, I'm opening the mic for you. Can you, because from the written question, I'm not very clear how to present it to Professor Rao. Can you ask the question on the mic?
Yes, sir.
Yeah.
I have one question.
Yeah.
We have just heard about the stories that have beared losses, like Jet Airways and one of the steel industries. But we also see some success stories of banks where the bank has taken some steps to revive the business from bearing losses.
Yeah.
Can you share some stories like this?
Okay.
That has revived?
You mean to the success stories?
Yeah, yes, sir. Definitely.
See, what happens, Mr. Suman,
Yes.
many of the success stories do not travel to outside world. Like you prevent a loan account from becoming NPA. Okay?
Okay.
It may not get publicized the way it should, because only when a problem account comes, then it gets highlighted. So there are a lot of success stories where the rescue happens and the account is saved.
Yeah.
But what happens is either it doesn't come to the public domain, or it doesn't get the kind of notice that it should get. Otherwise, just I would like to clarify one thing. The NPAs in the worst case scenario in India is 10% now.
Yes.
It was 3 to 4% before 2012. It was 3 to 4%.
Yeah.
Now, that means 96% of the accounts are good accounts, isn't it?
Yes.
Or even now, in the worst situation, 90% of the accounts are good. So borrowers are doing good, bank is able to rescue, bank is able to monitor. So I will definitely share some of the success stories which are in the knowledge. But the point I want to highlight that our systems are working well. Means our credit monitoring systems are working well because 96% of the loans are doing good and they are giving revenue to the banks. So success stories overwhelm the system. The problem accounts we are discussing because it hurts more to us. So rest assured that success stories are abundant and many, and we can always pick up some of the storylines of large accounts which have been rescued. We can definitely share with you, but otherwise the take is the success stories are much more in numbers than the failure cases which we have just discussed. Very nice question you have put.
Thank you, sir.
Thank you very much.
Thank you very much. I put you on mute now. If you have another question, I'll open again. Okay?
Okay, sir.
Thank you. Thank you. Mr. Rao, another very interesting question. You know, for many of these large corporate loans, there is a consortium.
Yeah.
Is it more complicated to manage problem loans in a consortium?
See, in consortium, what happens, there is a share stake. Every bank has its own share in the consortium. And there is one leader of the consortium. Definitely, managing the consortium advance is always much more complicated than lending individually. Because if you lend individual, then it is bank and borrower. But otherwise it becomes borrower to banks. And it all depends on whether you are the leader or you are a member. Even if you are a member, what is your share? Like suppose State Bank of India is having 30% share and I am having 2% share. Now, how much clout I will have on the borrower? So that is why what happens is normally the responsibility of the lion's share goes to the consortium leader or the next one or the next one, say top 5 banks. In the case of Jet Airways, I think there are some 13 banks are there. So out of 13 banks, maybe some are having very nominal stake because at one point of time when the going is good, people want to proclaim, banks wants to say that I am also a banker to Jet Airways. So they will say that, okay, I will give 5 crores, $500,000 or 50 million loan, small loan. But I want to be a banker. I will display that I am the Jet Airways banker. So when the going is good, it becomes like that. So the question is, how much of is your share? The other option is cooperate fully with the consortium leader, fall in line and go for sharing of your recovery amount. That is the best thing that one can do. And I would only suggest our young friends that we must always be with the consortium leader, because since his stake is more, he will take action which is much more appropriate to protect the interests of the bank. When you become the leader of a consortium, then you should be able to exert your authority on the borrower. But one thing I would like to, in this context, I would like to clarify. Large corporates, it is very difficult to deal with them in the sense that they may not listen to us. So the more appropriate will be not showing them the authority of a banker, but to play the role of a counselor or a friend to understand what is in the offing for them. Like suppose somebody is expanding the operations. If you perceive that that expansion is very risky for the entrepreneur, then you should have a talk with him. You should be very friendly. You don't say that I will stop your lending. Then plug and play model, you say that no, I will switch off. He will say, okay, you switch off, I will go to another bank. So that should not be the approach. The approach should be in a very, you should be a part of the, of his system, so that you are able to counsel him, you are able to just influence him. So the leadership is all about influence. So if you can influence him, then maybe that he will listen to us. And otherwise talk to the consortium leader, impress upon him. So here again, I would say that if you have a voice, pursue the voice. Pursue the voice till you logical end, means whatever you are aspiring for. So I think we need to do a lot of persuasion as far as managing the problem accounts are concerned, or to prevent the problem accounts.
Arjun, your question about Satyam scandal. So we will share with you a report on the course website. And this is a very
scandal.
Yeah, this is a very special case. I will have all the details for you on the course website. Now,
okay.
There is one question about the pandemic.
Yeah, pandemic. Yeah, it's an external
event. It is an external event. Now, Biraj's question is, what would be the best strategies to manage them? I think an extension of that question will be, will the classification systems undergo a change to accommodate this pandemic situation?
Yeah, it is happening. If you have heard, in India, the regulator has brought out 3 editions of relaxations. 3 editions means 3 times. First, they came out in March, then 17th April, then I think 22nd May. They brought out a series of relaxations because, see, this is a situation which nobody would have anticipated, isn't it? So what happens is, in such kind of situation, you will have to maneuver all your regulatory systems to fall in line with the degree of damage that is in the offing. It has not yet manifested, but it will manifest. So, like for example, 6 months postponement of EMIs. That is, you need not pay the installments for 6 months. They can be carried forward. That means if your loan is 10 years, it will become 10.5 years. That is one relaxation. In the case of working capital requirement, your interest accumulated on the working capital requirement will be converted into a term loan and deferment of loans, moratorium granted. And for banks, for this period, classification of NPAs are deferred for 6 months. And one more thing, the Insolvency and Bankruptcy Code, you cannot invoke for 1 year. That means the right to use the IBC is suspended for 1 year. So these are all some of the regulatory dispensations which have come because of the pandemic. I think different countries are having different approaches. Like for example, we have cut the repo rate by 115 basis point. That's a very deep cut to see that the interest rates become very softer for the entrepreneurs. And there is a government guaranteed loans which are granted. So a lot of relaxations will come in every country because the depth of damage is very high. Means it is very, very distressing. So I think with the proportion of damage, the reliefs will come in that way, regulatory relief.
So in effect, the borrower is allowed some leeway, and the banks will not have to provision and book a loss in the books. Now, what the interest component, is it deferred or cancelled?
It is deferred, not cancelled. Who will pay for it?
Right. So
only he will have to pay later on.
Still going to book this as an accrued income.
Yeah, it is not nowadays. There is no accrued system of accounting now. Okay. Now we have realization. So what is going to happen is that particular interest will be hived off, and an asset will be created like a term loan, and it will wait for another. I think they have given the up to March 2021 time to repay that loan. Otherwise, who is going to bear the loan interest? So they are going to.
When the interest is created as an asset, the other side of the balance sheet will be an income,
right? From the bank's point of view?
Yes, from the bank's point of view. I mean,
from the bank's point of view, we will not book it as an interest received, because under the prudential standards, unless the cash is received, we cannot. And they have not given that regulatory relaxation that you can do that.
I see.
Maybe that if the RBI comes up that, okay, you can book it as an interest, otherwise this whole quarter, banks will be having a very lower interest income.
So it will affect the short-term profitability of the bank.
It will affect the P&L of the banks, and deeper losses will be declared in Q1 of 2021.
Very good.
And unless the RBI again comes out with another dispensation that you can treat it as interest received, accrued but not received, which we have now changed to interest received pattern.
Now, switching gears a bit, is it more difficult to monitor SMEs compared to mid-size, large-size corporates? Ananta has a question.
See, as far as the small loans are concerned, they should be shifted to digital mode as far as monitoring is concerned. It will be very costly if you do it, that I will make a telephone call, I will go to him. Not possible to do that. So what you need to do is you have to have an internal policy of monitoring the account, and you should flag. We have to sit with the IT guys to raise some of the flags. Like you receive the SMS nowadays, no, that your EMI is due, or your stock statement is due, your interest is falling due, something like that. So that at least 60 to 70% of your monitoring goes to the digital mode. And another way of doing it is to centralize the loan monitoring system. So now hub and spokes model, we should shift, because the branch people will not be able to do that kind of monitoring for all the accounts. So you need to fix the size of your loan, which you will follow up, which the system will follow up, and incorporate it in the policy, loan recovery policy, get it approved and follow it.
So this link, can we link this to your ABC classification suggestion, saying that?
Yeah, ABC class. See, it all depends on the branch. What happens, you know, every branch is unique. I may be having a portfolio of, say, 1,000 crores. You are having 5,000 crores. My SOP will not work at you, at your branch. So everyone has to evolve their own, depending upon the staff strength. And one more thing I would like to touch upon here about the skill sets. We may be having people, but we don't have the right kind of skill sets. So again, resources and skilled resources. Why we are centralizing the loan operations in many of the banks? Because of the scarcity of skill sets. So you should make people more skilled, and also multitasking. You should not only be competent in credit evaluation, you should also be competent in monitoring. You should also be competent in managing the distressed assets. You can't say that I am working in recovery department, so I do not know how to do the loaning system. So you can't have that choice now, because we are in the digital era now. So we need to have a universal skill sets. That is why an individual's growth will depend on his own appetite to learn and train himself. We can't depend on the organization to do that job, because now it has become a very highly skill-centric activity, because all are centralizing. That is the problem.
Now, Basant has an interesting question here. He says that if the security is an asset, like a hospital or a school.
Security?
the security for the loan is an asset, like, such as a hospital or a school, how do you enforce it?
See, as far as securities are concerned, first and foremost, it is at the appraisal stage. Okay. Now we go to CRA, that is credit evaluation system. Okay, because the collaterals are offered at that point of time. That is before the sanction of the facility. Now, normally, if you are lending to a hospital, the underlying collateral will be a hospital only. If you are lending to an educational institute, the underlying asset is the educational institute, isn't it? So, in this case, what you can do is you have to pass on the asset in the case of distress in the whole component. Like I will sell the whole hospital. Not that I will sell the building to someone and equipment to someone and those kinds. So we will have to take a holistic look at that. So while accepting a collateral, that is why you should have the expertise to lend. Now, a person who does retail lending cannot do corporate lending without learning the tools of lending. That is why I was suggesting our friends that they should read and they should themselves equip with the nuances of lending to different sectors. Because every sector is specialized. Like now here, educational sector or hospitals, if they are your collaterals, what are you going to do? Suppose it manifests, it becomes a problem account. Now, hospital, you have to give an auction notice that I want to sell the hospital, not the other things inside the hospital. So, bulk of unit wise, you will have to sell. So, before taking it as a collateral, you should think of the possibilities of how to deal with the collaterals underlying the lending operations. So, credit evaluation system is a very important and one comfort I want to give to many of our friends. As far as lending operations are concerned, we are still at a very nascent stage. That is, our credit to GDP ratio. In India, it is hardly 52%. In many countries, it is 300%. I think whether it is Nepal or Sri Lanka or Thailand or any of these agglomerations, countries around this area, all of them have a very low proportion because we do not have the kind of risk appetite that we need to build. So skill sets, if you have, then you can build a risk appetite. And for all this, a timely action is the only solution. There is no other shortcut.
We hope that this session would have gone some way in augmenting the already high level of skill sets that our friends in NMB have. Yeah. Thank you very much, Professor Rao, for a very detailed and interesting exposition. Your experience in the industry comes through very clearly, and I hope that our participants have enjoyed and have good takeaways from the session. Of course, all of you will have a chance to interact with Professor Rao again. We have a case study from him for you to go through. And please wait for my messages on WhatsApp to tell you how the schedule will unfold next week.
And one word I would like to share.
Yes, please, Professor Rao.
Yeah, all of them or any of them who are not even part of this webinar can always send an email if they have any issues. We will together try to explore the possibility of finding out new ways of tackling this issue. So I am always open for that. And I take this opportunity to thank you and your team and the participant for the extended me to suggestions that I have given. If they go through, it will be very good. And I take this opportunity to wish all of you all the best and good going after the pandemic. Thank you very much.
Thank you very much. So see you next week, and I will be in touch with you on.
Special thanks to Tanji.
Yeah.
And special thanks to Tanji for the cooperation.
Thank you.
Yeah. Should we, Tanji? Should we exit?
Yeah. Thank you, Professor Roy.
Yeah, thank you very much. Thank you for all the cooperation.
No problem at all.
And
have a good weekend.
And we should also be thankful that there was not much of interruption on the internet side.
Yeah.
And also electricity failure, not that's all good.
Yeah.
So I sign off.
Yes, please.
Okay, thank you so much.
Welcome. Have a good weekend.
We'll be in touch.
Thank you. Yes.
Thank you very much. Same to you.